markets live in the future, and I think markets may be pricing in that perhaps the president's right, the rates should be lower. I would say that the market's pricing in lower, I think it's 2 cuts for the rest of the year, and then the 2-year, the overnight and the 2-year are inverted. So maybe the market's just pricing in the economic fundamentals. And sure, is a different Fed chair is a kind of forward guidance, but as I reiterate to people all the time, it's not just the Fed chair, it's a committee.
That was Treasury Secretary Scott Bessent earlier on Squawk Box. It's no secret that President Trump is frustrated with Fed Chair Jay Powell over interest rates. That was the Secretary talking a little bit about what he would see happening in this scenario. Of course, he's been mentioned as a potential Fed chair replacement. For more on this, we want to bring in Ken Rogoff. He's professor of economics at Harvard University. He's also the author of Our Dollar, Your Problem, an insider's view of 7 turbulent decades of global finance and the road ahead. And Ken, first of all, welcome. It's really great to see you here. You are a chess master, and you've spent some time gaming out this idea of a shadow Fed chairman. You're not a huge fan of it. What are the problems in the setup as you see it?
Well, I don't think having a shadow Fed chair who's going to be Fed chair is going to influence the Fed all that much. I think what Secretary Bessent said about a bit of forward guidance on what the chair might do, that's correct. But also, the shadow Fed chair is having to say at every moment what they would do, and if it's not in line with what Trump would do, then he can unnominate him. And so in a way, it paints the shadow Fed chair into a corner. Trump, I think, has said he wants the rate to brought down to 1%. I don't really see how that's consistent with the growth he foresees without having a lot of inflation in this economy. So it's very clever in a way. He's going to appoint the Fed chair. He won't control them. He's seen that with the Supreme Court justices, and he's trying to paint them into a corner. But I don't know that if he's wrong about the interest rates, that they really need to stay somewhat higher, that that's going to prove a good thing for the economy or for President Trump.
You thought up an interesting scenario that had not occurred to me, and that's what could happen potentially if there is a shadow Fed chair from within the Fed, and that being Jay Powell. If he doesn't step down, he may not be chairman, but if he doesn't give up his seat, what happens?
No, that is such a good point.
That's your point.
If Powell doesn't give up his seat, if Powell doesn't give up his seat and stays on the board, and Trump appoints someone who the rest of the board doesn't respect, I think if they respect them, they'll give them a lot of rope. They'll go along with them. But if they don't respect them, Powell will be the shadow chair from within the Fed, and the Fed chair may not control the board. Again, just a few minutes earlier, Secretary Bessent acknowledged that it's not all the Fed chair. You have to persuade the entire Open Market Committee.
All right, you've got a book that's out talking about, Our Dollar, Your Problem. And we did bring this up with Treasury Secretary as well, just the idea of the pressure the dollar has been under this year. You think that weakness will continue. Why?
Well, Trump inherited a very high dollar. And I'm looking at, given cost of living, other measures of how expensive it is in a country. We haven't seen the dollar this high since 2002, 1985. And both times the dollar, not overnight, but over a couple of years, came down very far, I think 40% by some measures after 2002. So sure, it's down 10%, but it's still very high. I mean, ask somebody in Japan where they've had no inflation compared to us, and yet the yen has fallen a lot, how expensive it is in the States. And I think if you look around the world, that's still the case. So sure, Trump's actions have probably accelerated, a move that might have happened anyway, but the dollar is still high. So even if Harris were president, I think it would be coming down.
And the implication of that for the economy, for the markets?
Well, I think actually it's probably fine for the United States. We're interested in having the dollar still be the lingua franca, the reserve currency. My book argues that's being chipped away at, and There are other things Trump is doing. But having the dollar come down is fine. That's one place where I agree with the president's instincts.
What you are a little concerned about is what happens with Treasury yields. Even with the pressure to lower rates, you think that yields are more likely to go up than down from here. Why is that?
Well, we're looking at global borrowing, not just U.S. borrowing. Look at what's going on in Europe, Japan. China may need to do something to pull out of its doldrums. We're looking at the need for AI in many countries for, if not stopping climate change, dealing with climate change. The global fracturing, home shoring. There's a lot of pressures on investment. And I think the real underlying interest rates going up, and real interest rates have gone up dramatically the last couple of years. And I don't think anything the Fed chair can do is going to dramatically bring that down. At the same time, interest rates, aren't reflecting a high inflation expectations. Maybe they're right. But that's one of the ways this mess can end. It could also end in financial repression, which pushes down interest rates. So maybe that's what's going on. But I would see the balance of risk to be interest rates at the long end rising. Certainly the Fed rate's more likely to go down than up. But at the long rate over the next couple of years, I think it's going to continue to go up.
Which is bad news for anybody who wants to buy a house with a 30-year mortgage, bad news for longer-term debt that we're taking on, and probably bad news for American taxpayers who have to pay off the debt.
Yeah, absolutely. I mean, we would like interest rates to stay down. Mind you, just to be clear, it was much better that this tax bill, this new big, beautiful bill got passed than if it didn't. That would have been a massive tax hike. It's not really that we had a tax cut. But the American voter hasn't really come around to the idea that we need to rein in the deficits. People like me may say it, Bob Rubin, some of you may say it, but I don't think the American voter is there yet. And until they are, and that might happen until we have an inflation crisis or something, I don't think we're going to do it.
Okay. Professor Rogoff, thank you for joining us. We appreciate it.
Thank you for having me.
Up next.